So I'm sure you also the dollar index video analysis in GBP USD on YouTube, where I was talking about how the dollar index was supposed to turn around. Let me just open it real quick so all of you can appreciate what I'm talking about. So if you look at this dollar index pair, I was saying on the video that from the way it looks, we were anticipating that the market has to turn around. And we said since the market had formed a peak formation and had moved level one into level two into level three, the market was supposed to start a reversal. And in this instance, what the market did, it opened with a gap. So you can see the gap right there. And then they sold on the first day and didn't pay attention to the gap. Then they closed the market. And then what they did, they opened with a gap again on the second day. But now in this case, they were closing the gap that was initially open. So they were closing this gap, which was initially open, at the same time leaving a gap open as well. So they closed two gaps at the same time and started going in that direction. So if you are clever enough, then you'll know that this is your whole peak formation. You know, this is your whole peak formation. And this being a future um pair, it's not going to print the exact same way currencies print. So most of the times you see all these gaps being left everywhere here because the market opens and closes at different times. All right. So um we had not seen this before. So our discussion was that we wanted to see the market start to sell. But then we said there is also a possibility that the market might sell to the 200 EMA and then continue with a buy. And we said, but whatever is going to happen, all we want to see is USD pairs starting to buy for a while because they've finished their cycle. And the reference we made was for GBP USD. All right. So this is why we were on these buys this past week. But my focus today is not really on what's gonna be happening. My focus is on how could we have taken entries on those pairs that we were trading. So I hope this is going to be helpful to you so that when you see it, you know exactly what I'm talking about. So we go back to odd USD and we want to try and find entries on odd USD. All right. So what I'm going to do is I will probably close here. So this is what you have on odd USD, right? And you're so sure that the market is supposed to buy, but this is what you can see at the moment. Even if you turn to the 4-hour chart or you turn to the D1 chart, um, this is the only thing that you can see. All right. So if you want, let me start from the start of the week. All right. So this is the start of the end of the previous week. So the end of the previous week, what the market did was they formed a peak formation and then sold one level and they consolidated. Now, the reason why I said GBP USD was going to sell for a little while, it was because other pairs did not have at that level. Some did, but the legs were not equal. And again, number three, because we were reversing a higher time frame cycle, we wanted to see a big peak formation. So when you look at this, you'll find this is your W. You want to see an M formation sitting at the 200 EMA. Remember what I always say. So you want to see another W here again, going in that direction. So this then means that you want to see AUD coming back down and forming a W, and then we can have a continuous cycle going up. If you're with me, please say you're with me. If I've confused you, please
Yeah.
let me know, because I'm trying to mix several things so that I bring my point here. All right. So now after this has happened, because we are reversing a higher time frame peak, this means we are going to form a bigger peak formation. So those are one of the things that you need to understand when you're analyzing. I know it's good for you to say, yeah, I've seen three levels. I want to see the market reverse and go up. Sometimes it's good to look at higher time frame and see whether higher time frames have actually satisfied those three levels as well. If they have, then be rest assured that there is no setup that will just leave just like that and start forming three levels. They will have to form a complete peak formation before they can go up. And that complete peak formation simple means you'll have a reset-like structure in the middle and then go back down to form another W that will support this W right here. So, which is what I wanted to see, because D1 had finished its three levels. So what I wanted to see was a big, nice peak formation, which will be visible on the 4 hour. So if you go to the 4 hour, then you appreciate that the 4 hour has given you only one one leg. So you would want to see the market come back down and give you a second leg. Now, here is a trick of how I do this, and I'm gonna do it now so that it helps you next time. All right. So let me make this a little bit thicker. Right. Mm, Come on.
Which the box, the black one.
This one, yeah.
Yeah.
All right. So maybe I can leave it dotted as is or dashed. Let's see what happens. Yeah, that looks clear. So I'll put it here. All right. So remember what I said, if some of you got this, my take profits and my stop losses are always beyond the body of the candle. All right. Let me talk about this before I move on with this. Let's say I want to buy and my buy is right here. All right. Let's say that's where price is and my buy is there. So when I start first, my stop loss, I put it here. Okay. The reason why I put my stop loss far away from the structure is so that if the dealer decides to come and tap the low of that structure, they will not get to my stop loss. All right. So if I see the dealer start to print red candles, okay, maybe print 3 red candles, I will exit before we even get to my stop loss. I will manually exit if I can see, like analyze and see that, yeah, this is a sell. If I'm confident that I'm the one who made an early entry and they are supposed to come and reverse on the low, I will wait until they get to the low. If they get to the low and the next candle closes below the low, then I'm out. All right. That's my own way of dealing with stop losses. I don't put stop losses close to my entry, no matter how much. I would rather have my stop loss at $100 here. All right. Don't be scared about that. This is how I do it. I'd rather have my $100 stop loss there, my entry there, and let's assume my target is here. All right. And then if price happens to move in my direction, okay, at this point from my entry and move in my direction up to maybe there, and it closes above that week, only one candle, then I can shift my stop loss. I can shift my stop loss either anywhere halfway or at break even. So that is how I do it. I first let price play out, because sometimes the dealer has a tendency of knowing where your stop losses are, and then he will just throw in spikes and take away your entry. I will show you that when we get further into this odd USD, just to try and show you how crazy the dealer is. Okay, so I'll explain a lot of things, and I want you to pay very close attention. All right, so now this, at the moment, I said we're going to use the body of the candle. So the body of the candle is probably your entry. Let's say you want to catch the peak formation. Use the body of the candle, not the wick. The reason why I'm saying that is because the dealer also has a tendency of tapping where your body of the candle is, but not the weak. The dealer has a tendency of coming back and just tapping. For example, maybe look at this. Let's say you wanted to buy here, and this is what you saw first, and this is where price came second. All right. So if you put your line on the body of the candle, or maybe let's say you put your line on the wick right there, it means your entry was not triggered. But if you put it on the body of the candle, your entry got triggered, and you've got literally to zero drawdown, and the market moves away. That's what the market loves to do. All right. Or maybe, for example, you wanted to catch this small sell here, and catching this small sell, if you put on the border of the candle, you get triggered. But if you put on the wick, you do not get triggered. They miss your entry just like a pip or less. So that is what I hate about the market, and I try to avoid all the time. All right. Now, moving forward, so even your take profit, all right. Can you please mute your mics? Even your take profits as well, instead of putting them on the wicks, put them on the body of the candle. Don't put your take profits on the wicks, because if you put it on the wicks here, you might not get your take profit hit. There is a high chance. So same applies. You're selling there, it's the same thing, and you put there, your take profit gets hit. You put here, it does not. I can guarantee you, I've got trades that I traded this week. One of the annoying ones was USD JPY that I had since last week. And all right, let's go to USD JPY. Just 1 second, and then we come back to this. So I had USD JPY. All right. Okay, it's because it's cut. That's why you're not gonna see that. So maybe let me remove all this. Yes. So here is USD JPY. I want to show you how my entry was at Where was my entry? My entry was somewhere at this point right here. And they opened with a gap. They came back because I had a stop loss at break even the previous week because I didn't want market gap. They took me out, and guess what happened? All this happened. They went out. Yet initially, I had my take profit. I had my take profit initially set there somewhere where they missed. There's somewhere. No, I had two entries on this. So the first entry initial was here. That was last week. And I remember my take profit was somewhere down there. And then they started reversing on me, and I was like, what is going on here? And I started analyzing, and I saw that things were changing. But I closed this position because I was suspecting it could be a reset and went out. Then on a Friday, that's when I realized on other JPY pairs that it was not, and I took my sell here. And I remember saying to someone that I was waiting for USD JPY sell, and this is how much that I've lost. You can see I could have been selling this whole week. I would have made a lot of money with USD JPY, but I missed all this simply because my stop loss was on break even. Now, I'm not saying people should not put stop losses on break even, all right? Yes, you can put your stop losses on break even, and it's okay to have your stop loss taken out. It's very much fine. But what I'm trying to say is if you just entered the pay, don't put your stop loss on break even straight away, because if you do that, then it means you're gonna get hit. That is exactly what I'm trying to say. You need to put on break even when the market comes to that point, all right? And then goes away and breaks structure, then you can put on break even. All right. Now, let's move on with this. So now this being the case, and so you are expecting your W to be around that line. Remember, we said body candle, right? So let's go back to H1 and see how the week starts. So you're looking at all this and you want to see how the week will start, all right? So looking at this, this is how your week starts. Your week just started with a gap, okay? So your week just started with a gap. So now that having a gap there simple means we have a chance of even selling the market more. So all I need is to look for an entry there and sell the market all the way down. That's the whole psychology or whatever behind our GBP USD pair. That's why we were selling it, because we anticipated that they will move from here and go all the way down. But they decided to open with a market gap, and that on its own showed me that that is the exact same thing that will try and close first. So by closing the market gap, they will move all the way down and form a peak. Then you can enter there. So probably you have a buy limit there. You can then start looking for sell positions. All right. So let's move on and see how this turns out. And look at that. So now, if you go to the 15 minutes, you probably do not have a setup at that particular moment. I'm pretty sure the market there just moved away without any setup. Yeah, that's what happened. The market moved away without any setup. So that means you cannot trade this unless you want to be very specific and start saying you see an M formation here, a small M formation, and the market did you like say this is an M formation, the market did test the neckline here. If you want to start being that much sensitive, then yeah, you can take it. But for me, it's not really that clear. And I remember someone who asked and said, but why are you guys trading with the M formation on the Asian session? This was the reason. The market gap was the reason why we saw a clear M formation, even if it was in the Asian session, and said, we're trading it and we want to see how far we'll go. So now this is AUD USD. All right. Now they're starting to pull down. Now there is your setup there. So they've formed your setup on the 15 minutes time frame. But now this setup, they've formed it in the weekly of the day. So there is your setup there, but we cannot take it because it's a type 3. So we'll let it be and move on. All right. We'll let it be and move on. Let's see what else comes up. So that's your ID50 there. Your ID50 for that setup on M15. And then now we want to see the market fall down straight away. Look at that. The following day, from that ID50, the market quickly goes down. So if you had entered it the day before, it means the following day, the market just quickly goes down. And now, remember, you've got a buy limit here, or you don't have a buy limit. You're going to find an entry, whatever you want. It still works that way. But you are expecting that when you get down here, you want to see the market starts to form a peak. Now, if you look at it as this way, definitely there's no signs that are showing that the market is going to stop anytime soon, all right? But you need to be patient. Look at that. There's no sign showing that the market might turn around, okay? Whether you have a buy limit has been triggered or you don't have a buy limit. Right. Now look at the next one. You saw that? So the market printed a red candle, and I'm pretty sure you could have been crying and mourning there and saying, ah, this is not what I expected. The market just printed another red candle, and saying I'm gonna be hit, blah, blah, blah. And then the next thing, or maybe you exit your buy limit, and then the next thing the market throws that. So it's all psychology, right? The market throws a big green candle like this and it closes green as it is. So now you come and think of it, next candle becomes green. So if you had been patient, you were going to make money. Look at that. Now they are gone and you want to try and chase them. Maybe you jump in with another new buy there, and you think they will continue. And guess what? They start reversing on you. So that's how people chase trades. Yet you were supposed to maintain your buy limit there. Remember, I said the rule of the body candles, maintain it there and just leave your buy limit there. If you don't have a buy limit, then wait for an entry. All right. All we want to see is a W. Okay. Want to see a W. So now this is what happens. I'll say then that what happened on 50 EMA, what happened on 50 EMA there is the middle of the W. Remember, so you need to see these things, right? You've got a V, you've got an M on 15 minutes. Now you need to see something like that. So your 50 EMA is passing there, which is a 200 EMA on M15. So that is what you see. This right here is that, the neckline. And then this is that. So now you want to see that, all right? So you don't know where this is going to appear, but you can assume, all right? So for starters, it probably might appear here, all right? For those who are well vexed with ICT, you can probably put that as your order block. I hate big order blocks like this. But if you want to refine it, you can come to the 15 minutes time frame and then say, okay, on my 15 minutes time frame, I expect this to be my order block. Maybe for instance, for example, put it here and say, this is my order block. This is where I expect price to come to, all right? You want to catch the second leg, okay? So this is where I expect my price to come to. what's another thing we can see that can show us this is an order block? Sorry, that can show us this can be our entry. Maybe the what else? Let's just put the body candle there and see if they're going to tap that area. Go back to the 15 minutes time frame. Is there anything else? Anything else?
Gap.
Sorry?
No, sorry, coach.
That's all right. All right. So here on the first leg, if you want to be clever or whatever, you can even go to the 5 minutes time frame and say, this is my neckline for that W, and put it there and say, this is where I want my price to turn around. All right. The neckline of the, maybe we can say this is neckline M5. All you're looking for is an entry, all right? And then this you can say order block M15. And also the body candle as well, based on H1. Now, you're already on the neckline on M15. Maybe you have taken your buy, which is fine. You took your buy there, or your buy has been triggered. All right, let's see what happens next. Or maybe let's go to M15 so we can see as it comes down. All right, so this has been triggered and your stop loss is below the structure. Now see what happens. Now next, there we go. Now there you go. Your order block has been triggered. So you're now in the entry. All right. So now you want to see the market reverse now. Okay. You want to see the market reverse now. This is the second leg. Now look at what happens. Okay. So this being the second leg, you already have another W like this one on this leg. You've got another one here as well. So you've got the neckline of the W. So if you've got a question, please ask the question. All right. Because this you will be seeing in real time. So you've got a first leg, you've got a second leg, you've got a neckline there, because this candle has closed above there. And all you want to see is the market start to buy. So let's see if that is going to happen. All right. Next thing. Okay. Now, there you go. The market starts to buy. So now we are on the following day. All right. So this is the day where we saw the setup. So we have missed all this, and you still want to find an entry. Now, then the following day, what happens is you've got something like that. Now, that candle that you saw there, which ended as a spike, I can guarantee you it was there to test the neckline of that small W that you saw there. See that? So there is no coincidence, guys. This thing happens all the time. Look at that. That neckline there. They were there to test that neckline. So that could be another entry as well. Now, someone might ask and say, so where exactly do I enter? Because this is a big box. You always put your entry where the point of interest starts. Where your key area starts, that's where you put your entry. So if it was that one, your entry was going to be there. If it was this one, your entry was going to be here. Where it starts, that's where you put your entry. I love the neckline retests because it happens all the time. All right. So that's where you could have taken your entry. But again, we did not see this. The only thing we saw was that candle which tested, another candle which went up and then came back down. That's the only thing that we saw. And I said, let's take our buys there. So let me try and remove all drawings and then just put our buy here. All right. Now there we go. That's where our buy is, our entry. So we want to see whether our entry is going to come into a loss. All right. So moving forward, this is what happens. All right. Again, you can see the test and back inside the range. So someone, after seeing the redness of that candle, might think, maybe this is not a buy. Always make your decisions when a candle closes. Do not make a decision unless a candle closes. Because if you do make a decision before a candle closes, you're going to be in trouble. All right. Now look at that. You see that? It started being a very big red candle, but then ended up closing as a green. And I know some of you took entries somewhere here. Okay. Which is still fine. Now let's see. Next one. In a loss, in a loss. All right. Now, what do you think is happening here? For me, what I think is happening, this is a W. For me, this is a W. I can see it already before I even turn to the 15 minutes time frame. If you want, you can go to the 15 minutes time frame. You see it there. A nice W sitting right there. All right. So even if you want, you can still take another entry from there. Now let's see what happens. There we go. You see how these candles, they turn red and then end up turning in green. They're just there to scare you. Look at this one. And you're thinking, that's where people start to have second opinions and think, probably this is not the right thing. Allow the market to play out. Allow the market to move and close candles. If you are not even sure, close that MT5, put a stop loss, close the MT5, put a TP, go away for 4 hours, and then come back and reanalyze after 4 hours. Don't analyze 15 minutes candles because you've only seen 2 candles come out. Go away, come back after 4 hours and reanalyze again. All right. Because you'll be shocked after 4 hours, you find something like this, and then you're like, so it means we are now moving. It's because you put a lot of emotions into it. Okay. That is what kills most of you. Too much emotions. Look at that. He's still dancing there. Now, while he's dancing like this, okay, while he's dancing like this, Euro USD is actually making progress. Okay. Look at that. Look at where Euro USD is. Euro USD is making progress. There, he has already moved from here all the way up to there. All right. And then look at Euro odd. Remember the explanation that I was explaining. All right. Look at Euro odd. Euro odd has made so much progress as well. So these are moving at the same time. All of it has made so much progress. So what happens is because Euro odd was a buy, right? Because EA was a buy and EU was a buy. So they will hold AU. They will hold AU. Even if AU is a buy, it will be consolidating. All right. It will be consolidating. Whilst EA and EU are buying. Until it comes to a point where this one is now a sell. Only then AU will buy. All right. It will only buy if that one becomes a sell. So that's the trick that you should know when you're trading these pairs, the relation of these pairs. It's just like the same way when you are trading Euro GBP and you're also analyzing EU and GBP, that's the exact same thing that will happen. Or it's GBP CHF and you've got USD CHF and GBP USD. It's the same thing that's going to happen as well. So that's how you analyze. So as long as EA is buying and EU is buying, so Euro is what's pushing EA to buy, all right? Is what's pushing EA to buy. Now, AU has no chance of going up until AU has power to overcome Euro, all right? So now USD is not putting any much power that's more than the euro at this point. So until USD pushes AU far enough, then EA can be a sell. So if you look at it, you've got a level here, level 1, you've got a level 2 there, and then you are now moving level 3. All right, I'll just put it here. You're now moving level 3. So now moving your level 3 will keep AU in the same spot. So let's move this one and see how it goes. All right. So see what happens now. So these red candles that you see now, all right, if you go to AU, you'll find AU probably gave you a small green candle. See that? So AU actually gave you green candles while EA was giving you red candles because they will have to move the opposite. I'm sure you guys are getting this. If you're getting this, please let me know on the charts page. If you're not, please let me know as well. Okay? So AU continues with the green candles, all right? And then all of a sudden, it now starts to do something like this. Now, let's go to Euro USD first. Let's see what's going on. Euro USD, you've got it, it's stagnant. It's just sitting there now. But Euro odd should be, no. Euro odd should be showing us green candles at the moment. So you can see Euro odd is showing us green candles. And that is why I said now I have the confidence to sell Euro odd because I can see 3 clear small levels. Now I want to see Euro odd sell. If you look at the 4-hour time frame, then you will appreciate where this market is going, that it's formed a peak formation. All right, it's formed a peak formation and then moved a level 1, moved a second level, and there's a high chance we're going to move a third level. So wherever it closed on Friday, if it closed in a sweet spot, you are good to sell this until it breaks the low here. All right. So we'll see what happens with that. But that is what we actually want to see. All right. So so let's see what Euro odd will do. So Euro odd, hold on a second. We were actually here. We were somewhere there. All right. So that is all that you can see on on Euro odd. But now I'm confident this is a sell. Even if you go to our template, you can tell this is now your second leg. All right. So we move on. I love how this closed because this shows me, remember what I was teaching you a few weeks ago about the kangaroo range theory. All right. So first of all, you've got a pin bar there, which is good. So the candle range theory, you've got the high of the candle. This is what made me sell it. All right. You've got the low of the candle. you've got this candle that swept the high of this candle. All right. So that candle swept the high of this candle. So what do I wait for? I wait for the third candle to come back and interact with the high of the first candle. Then from there, I take my sell. Okay. I'm going to repeat this for those who were not there in the lesson. So you've got this candle, all right? And then you mark the high and the low. Then you want to see the next candle sweep out the high of this candle. Just sweep it out and stay up top there or close below the high. Sweep the high and close below the high of this one. But we don't want it to trade all the way halfway. We want it to stay somewhere there. Then the third candle, we want it to interact with the high of that candle. All right. And then we take an entry from there. So now this is officially our entry. Okay. This is officially our entry. So let's see what happens. All right. So next candle comes in and it does tap it as well, and it's green. You might be wondering what's going on, but look at the next candle, becomes red. Next candle, red. Next candle, red. Now you are in good profit. All right. And what is going on here? All right. These green candles coming here, it's an indication we are testing the neckline. All right. So we are testing the neckline. Right. Somewhere there. We are testing that neckline. That's what's happened. So you always have to have a reason why the market is doing whatever it's doing. The moment you can't find a reason, then it means you shouldn't be in that trade. All right. So this is what happens. So that's an ID50. Okay. Look at that. Look at that. Comes back. Now, the reason why it comes back to me at the back of my mind, I'm like, oh yeah, they want to form an M on that neckline. What they are doing is they formed a big M, which is this one. Now they want to form a small M. That is what's on my mind, all right? That's what's on my mind. That's what I'm thinking when I'm seeing this. I'm like, yeah, they want to form an M. That's what I can see, okay? So like I said, you need to have a reason of what the market is doing, whatever it's doing. Now, I expect to see the market going down. I don't want to see it going back to my entry, all right? Okay, look at that. All right, all right. And they stayed here for a very long time, okay? They were gonna close the market here. Now, see how your market is consolidating. All right, see how your market is consolidating. Now, go and look at AUD/USD and tell me what's going on. Okay? Or while your market is consolidating, AUD/USD is actually finding momentum to move up. AUD/USD is what? It has been moving up all along while that was consolidating. So you can actually see what has been happening. And the only time they came to our entry is once. All right? So the correlation of pairs is very important, guys, okay? The correlation of pairs is very important. It will help you a lot. Like, for example, this is the first day where we anticipated that the market was going to buy and it bought. And then I'm just going back to this so you can see it real time, okay? So this is what happened, and market came down. I know some of you here probably closed your positions. I know you. And then that happened. And I remember sending a message and saying, I like what I'm seeing on AUD/USD. because this is what happened. And on Euro Odd, it was actually the opposite. It was a sell. And I sent a message that said, I like what I'm seeing. That's what was happening. But look at how they came close to my entries. I'm not worried. Do you know why I'm not worried? It's because my stop loss is far away from this structure. It's down there. So I'm not even worried. Okay. Now look at what happens next. All right. Did you see the kangaroo range theory there again? Sweep the high and then come back to halfway off the candle. But I'm not worried whether this is gonna continue like start selling all the time. I'm not, because I'm expecting it to buy. Okay. Now there you go. So that is how the market takes people out. There you go. All right. So now you look at the big picture now. You've got a nice W, a nice M, and a nice W, but you are not going to see this W unless and until you open your eyes and pay attention to the liquidity details. You saw how we predicted where the first leg of that second W was going to come from and how we were going to make our entries going forward. And this is just how the market did. And look at how the market then sold. And I'm pretty sure some people would be like, the market is now selling. Maybe it's reversing. All right. But look at this. I'm seeing another opportunity there. I'm not seeing a sell. I'm seeing another opportunity there, an opportunity to buy, because I want to buy the market. I don't want to sell it. All right. So if I see something like this, I'm seeing an opportunity. I'm seeing what? A safety trade, an opportunity. Let me see. Did they even cross the previous day? Yeah, they did. So I'm seeing an opportunity there of a buy. All right. And what happens next? Even if you're an intraday trader, look at that. They come back to test the neckline of that W. All right. And guess what? They start to move up. So even if you're an intraday trader, you're going to make money. Okay? You're going to make money. That's how I don't want to say easy, because if I say easy, it would be as if um I've got some notes that you guys don't have. It's the same thing. You need to open your eyes, but it's straightforward. It is straightforward. Forward. Someone is saying somehow I need to go through this video over and over again to really grasp it. It's quite confusing. I think this video correlation of it is actually something big, but coach for swing trades, ID50 was not safe to trace. The dealer tested them and dropped a huge wick. So a huge wick doesn't matter, all right? Why am I saying it doesn't matter? This is where you took your entry from, okay? Now, the only wick you can see here is this one. This is the only wick that you could see here, that one there. Because we saw the market after these 2 weeks had formed. So that is the only wick that you could see. And if you had entered here on my first entry, okay, I can guarantee you that your stop loss was originally going to be here, okay? If you want to put it there, it was going to be there. So either way, it wasn't going to be touched. Your stop loss was going to be far, far, far away from your entry. And that's not too much. Let me try and see if this can actually help us. For those who are, I have never used this thing before, because I'm like, what are all these numbers? I'm assuming this is 7 pips. Is it 7 or 7.5? Can someone help me here? Is this, how many pips is this? I would assume 25? Maybe. I need to sort this thing out to show only pips and not money. I'm gonna sort this out. But that is where your stop loss was gonna be, and that is where your entry was going to be. So you can see that already. If your target was here, or maybe let's say you're targeting there on the body of the candles on your left-hand side here, still your reward to your risk is now big. So you've got twice the reward. If you look at it, you've got twice the reward now than how much you would have risked. So you can see it for yourself. With a 0.01, maybe that's like $10, maybe. Maybe that's $10 where it is now, and your stop loss being $5. All right. So if that's 5, that's 5, and then that's 10. And then you walk away with $10 after risking 5. So that's like 1:2, okay? So that's how you could have done it. Now, you've got a choice here. Do you want me to start analyzing how next week is gonna do, or you want me to keep going with this? Because I personally think next week is self-explanatory. We're just continuing the trends that we left off. So do you want me to analyze next week, or you want me to continue with what I'm talking about? You make a choice and I'll do that.
Let's analyze for next week, coach.
Analyze for next week. Who is saying
Yes,
that? All
coach.
right. So how many people are
Yes, coach.
supporting him? Because if we analyze for next week, that's what we will end on our video. I'm not going to come back to any of this. All right. We'll have to do it some other time. So what is everyone saying?
Looks like they agree.
Can we continue with what we are doing, because it's
All right.
opening our eyes to some other things.
All right. Someone is saying continue. All right. So we've got continue. We've got analyze. Those who are agreeing with um Pastor Danny is saying let's analyze for next week. Can you please type on your chats page that yes, if you are agreeing with him, just type yes. All right. If you want me to continue this, type continue. If you want me to analyze next week, just type yes. Analyze next week. If you want me to continue, just type continue. All right. I'll do what the majority wants. So 2 people have said continue, and 1 person is saying let's analyze next week. All right. So 2 people are saying analyze, 2 people are saying continue. All right, let's go, guys. Let's go, guys. I'm closing the vote at 7:35, okay? I'm closing the vote at 7:35. What do you think, guys? What do you think?
Yes, sir.
All right. So this is what we were expecting on AUD/USD. This is how we could have entered AUD/USD all the way from the start of the week up to the end of the week, and depending with what you wanted to trade, whether the sell or the buy. All right. So looking into next week, there's something interesting that I'm seeing here. Okay. Now, I know you can come here and say you have seen level 1 and you have seen probably level 2. But to me, all these are more or less like M15 levels. Do you know why I'm saying that? It's because I am seeing a consolidation at this point right here. All right. All this to me is a consolidation. And I am thinking the market will come back down here to the 200 EMA, form the low of the week, and then start to give us those levels that we are looking for. So this being our first level, I want to see the market do this and then go up. So now that means I have every right to extend my level all the way up to there and just say, oh, this is level 1, so that it breaks this structure here. All right. Remember, what you want to see on your levels is the market breaking structure. That's very important, guys. If you want to see correct levels, have the market break your structure, then you can say that's a level. I know it's not going to be 100% always that way. Sometimes you can use higher highs or higher lows, but I prefer to first start with break of structures there to confirm my level. So because that's my neckline, then it simple means this whole thing, I can regard it as my level 1, because what happened on the second day here was more of a consolidation. So the market was just consolidating at this stage. It went up and then it came back to the same place again and consolidated. So that's why I expect it to form a W at the 200 and then start to show me the second leg and the second level and the third level. So that is what I want to see. Then we can have a peak formation. Now, you want to know how far the market will go? Use our 3 times ADR. I don't want to switch on and off from this because I want to stay on this now. But if you use our 3 times ADR, it should show you that your 3 times ADR is somewhere here, somewhere there, yeah. Because I once did it and it gave me something similar to that guy there. Yeah, that is how much you expect AUD/USD to go. So that's gonna be a very good buy next week. I'm still holding my trades. No matter whatever happens, whether they come back. Now my stop loss is on break even. If they come back for me, fair enough, but I'm still holding and waiting to see what's gonna happen. But yeah, I expect the market to form a low here, go up, and then give that on those highs. That's where I expect to see my second level, and then the market goes up and then gives me level 3. Then we'll analyze, we'll analyze from there. All right. So that is exactly what I want to see. So that's what we want. From Euro odd, the one we just discussed. Why do I always write UA instead of AUD? From Euro odd, because we are anticipating a sell.
It's because that is where your destiny wants to collect money. Boss.
Okay. All right. Yeah, so for Euro odd, because we've had those 3 levels, and I said we're coming to the 800 EMA, which is the 200 on the H4. So I anticipate a sell on this. Now, this is a very good pair, guys. If you come into next week and you see the market just playing around at this point and not leaving, I will gladly say take the sell there and just fall with the market. All right. So because your target is gonna be the body of the candle, so you expect the market to be right there. All right. That is where you expect your target to be at this particular point. But this is a strong sell. I do have a position on it as well, like I told you, right there. And I'm thinking of holding that. And I know someone might look at this and say, oh, no, but this is a reset, all right? Of course, it is a reset, but it's an unconfirmed reset. And the only way for it to be confirmed is when it breaks the previous peak formation. And we do not have time for that. So the easiest way for us to tell whether this reset will hold or not is to analyze other pairs, like the odd USD pairs, where they are going, other Euro pairs, something like that. So if you analyze those and you are expectant to see odd USD buy heavy, then that means you want to see Euro odd sell heavy. So now if we have news next week, then be assured that news is going to go this direction, all right? While it's odd USD goes that direction. So that is what you want to see happen. All right, now let's go to NZD USD. This is the pair that I did not even analyze last week, but we can try and crack the code and see what really happened. So I didn't analyze this pair and I do not know what will happen myself. All right, so before I see what's happening on the left, I don't want to feel like I'm cheating, so I'll cut this straight away before I see anything that is on the left. And then we start from there. All right. Now, we said USD pairs I sell, I buy. We don't want to get too much into that. But looking at this now, you can see that if you were anticipating that this was gonna buy from here, it actually went past it. Some few pips, but yeah, those pips can hurt you a little bit. But that's how they closed the market on Friday. Remember the trapping tactics of the dealer. So that is what the dealer decided to do. He decided to trap traders in on the wrong side. So he knows that he is supposed to buy here, but he made sure that he does not what? He does not buy. He made sure that he does not buy, but instead trap traders on a Friday on the low side and also grab stop losses here. Because he knows there are some people who have already taken entries there with buy limits. And so he wanted to grab those stop losses before he buys. So that's one thing that you need to take note of. Now, we are coming into the new week. What exactly are we supposed to do? Let's find out. So first of all, we move our line now because we've got a new reference point. So we move our line today. But what I personally do is I personally put both lines because my initial reference point was this one. So I love to have both lines sitting there, and I want to see what the dealer does when it gets to that point, okay? Now, there are cases where, like I said, sometimes you've got a longer week, like very, very long week. Putting your line on the border of the candle sometimes may be misleading. So you got to be careful, like how long a week is this that you see here on the second line. It's not a long week. I'm talking like really long weeks, like whereby you've got, maybe there was news and you've got a week this long. Then you come and put your line on the border of the candle. That may be misleading a little bit. So you got to be careful for situations like that and only put when you've got shorter wicks. Now that we've got two lines, let's see what will happen, all right? So start of the week, The week starts with a gap. Now, this one, we can't really say we're gonna jump in and sell because it's close to our reference points. So even if you're gonna sell, it's not gonna be for a very long period of time. So there's no point trying to force a sell onto this, unless if it does present a setup. But for me, I would let it be, unless I see something like that. All right. That looks interesting. Let's go and look on the 15 minutes. So that does look like a nice M formation, but I don't know if they will come back around those areas to give me an entry. Let's just see. Let's continue and see what will happen. So they never did. Oh, maybe they might. Yeah, they did. So I don't know if you guys saw what I was waiting for. I was waiting for that part there. All right. I was waiting for that part there where they come for the neckline. So that is what I was waiting for. And guess what? Yeah, they did come for the neckline. So that could have been a nice one to enter as well, just like pound USD. And from here, you want to see the market sell down, right? You don't want to see the market coming back. You want to see it sell down. Now, look at that. Now they come back on you, and that's very scary, I know. That's really scary, all right? Now you're in a loss. Let's see what happens. So because you're in a loss now, you're also saying to yourself, I hope they don't break above this high, all right? So you're analyzing, and you are in a sell here, okay? And your stop loss is probably sitting on the 800 EMA. Remember what I said. If the market doesn't move that much, my stop loss stays far away from where my entry is. Okay, that's just me. Right, let's see what happens. Now, looks like we're back. Looks like we are back. They don't want to break that low. They don't want to break the low. Let's keep going. Now they're coming back to my entry, which is fine. All right, now we are on the next day. There we go. Right, this is news, I think. This is news. There we go. So can you see? Right, I'll find the short position to try and show you the risk reward. Can you see that you probably would have entered? Now, let me put it in the right spot where there's a start of neckline somewhere there. Right. Maybe my stop loss was here on the 800 EMA. All right. And then this is how far you would have gone. So it's twice the reward as well. But. Remember, he has gone below your points of interest. So you were expecting that he was not going to break it, but he has broken those points of interest. Maybe if you were trading news, you were going to say, ah, yeah, I'm trading news. So you know news will go wherever they want. You don't care how far the target is going to be. So that was going to be good. But if your TP was here, then that means this is a risky trade. Remember what I said? Because it is too close to your point of interest. It's a risky trade because your stop loss is right there. It's actually bigger than how much you want to get out of the market. So those are the things that you're looking for, guys. Those are the things that you are looking for. You want to get a trade that you know is going to reward you longer, even if when you compare it with your stop loss and your TP, you know that it's twice or it's 1:1 at least, or more than that. All right. If I put it on the exact law, that was definitely going to be 1:1. But I do not like trading 1:1 rewards pairs, reward setups, because they're as good as nothing to me, because you are risking $5 to gain $5. What's the point? I would rather risk $5 to gain 10. So that is why I didn't want to trade this, because it was too close to the points where I expect a reversal. And it's good that news pushed it further. That's very good. But if you had your TP already set, then this was not going to be a really fruitful trade. All right. Now, let's go with it and see where it takes us. All right. I'm just gonna remove this. Okay. So let's see where this takes us. All right. So this is the next thing. And they're still looking like they're going down. All right. And remember, you want to buy this pair. Okay. Now look at that. And mind you, if you had a buy limit, then your stop loss has been hit already. There's no way you were going to survive this. Your stop loss has been hit if you had a buy limit. That's why I hate them. All right. Now let's see what happens next. Now, this to me looks like we've got a small W on the 15 minutes time frame, and I can call that W as well on the 5 minutes time frame. All right. So it's there on the 15 minutes time frame, but clearly visible on the 5 with a neckline sitting right there. All right. A neckline sitting right there, and our nice W there. Now let's see what happens. There you go. Now see how it looked like it was gonna continue buying. Like it looked like a real buy, you know. If you look at it from from this 1 hour time frame, you could tell that, yeah, this is a buy now. But yet it was not. It was gonna continue selling. Remember, I've got the neckline of my W, and if you want, for those who wanna trade order blocks, I think you can use that one as your order block because it's got a longer wick there. So I can now move my entries here and there. So this is where my entries are. All right. Now, the first one is if it happens, they turn around in the neckline. All right. The next one is if it happens, they turn around here. But it's not like, how are you gonna know when they will turn around? You'll see it when it comes. Okay. If they don't give you the setup, then fair enough. Now look at that. They've tapped the neckline on that first W on M15. Okay. Let's see what happens. Now they move down, and I'm thinking they are moving down to the order block. Now that looks interesting. All right. That looks very much interesting because we have seen this before on another pair. So now see how they did not touch this that we called the order block, but they did play around the neckline of the W. That is why I say it's good for you to say, this is my area of interest. I want to see what the market will do when it gets to that point. All right. Now, having a W there, and now I've got a W here, and I'm trying to see where exactly can I take my entry at this point, right? Now, so that it doesn't confuse you, I'm going to remove the initial, or maybe let me leave them. Let me just put new boxes just in case they spike all the way down. Remember, I said I don't know about this one because I didn't see it. So I'll put a new box there on the neckline, all right? So I want to see them come to the neckline. So that means if that was the case, then my entry has been triggered here. Let's say you here on those, sorry, on those two lines, the first two lines that you see, the dotted lines, that's where you want to see the setup appear, okay? Now you want to take the setup and you want to be sure they are turning around and you are catching the second leg of a peak. Then the neckline of that second W is where your entry is. That is where you take the buy there, all right? Or someone might say, I want to take the buy on the order block. So you're going to come to the order block. I hate this thing because every time people say order blocks should have the one with the longer wick is an order block, but I don't care. I'll just put it on the red. All right. All I want is an entry right there. Okay. So I want an entry either on this line or on that line. So if it's that line, I've taken an entry. Or if I want, sometimes I can take my first entry there. Maybe say I want to enter with 0.1. I'll put 0.05 there. All right. And then see what happens. Right. So my 0.05 has been triggered and is in profit. Okay. Let's see what happens next. Look at that. All right. Next day. Right. We're back and we're gone again. Okay. We're back and we're going again, but now we've moved a fairly big amount. Imagine this is news again. And news has taken us all the way up because I took the entry of the neckline. All right. Again, I'm going to stop here. Are you guys getting this or not? If you're getting it, say yes. If you're not, please say no. I'm confused. All right. I'm trying to show you where your entries were going to be, and I'm trying to show you how you were going to wait for those entries. All right. How you are going to wait for those entries. So you are using price action, no indicator involved, just price action. All right. And I'm not saying indicators are wrong. Close above 13 EMA. It's good. If you want to check, you see that red line there is actually your close at 13 EMA. Where you actually entered and it got triggered, that's a close above 13 EMA. So you're still entering in the same spot, but the difference here now is you are just using candles, no indicators. But you find when you use indicators, it's going to be this exact same spot, all right? But you are better off understanding candle movements before you engage indicators, because I don't want you to depend on indicators. Okay, so this is where you were gonna be on NZD USD. Now you are gone up. You caught the second leg of the peak. All right, you caught the second leg of the peak, and now we are on H1, and look at that. All right. Now, I know some people might think, oh, maybe that's a sell now. But guess what? They went up. Now, if you look at NZD USD, now that's what we call a level one move. That's what we call a level one move. All right. So that is what we call a level one move. Break the structure here, okay, and move level one. Now, if you want to know where the second setup is going to happen on the next day, assumption is on those highs. That is where the second setup might happen. So you already have points of interest on the next day before you even see anything. You want to see the market come to those highs there, test the highs, all right, and then continue going up. That's what you want to see the market do, all right? Now, let's see whether the market does that or not. But that's where you want to see the setup on the next day. I'm using candles here. I'm not using indicators. But look at it. Your 50 and the 200 are actually crossing at that point to show you that indicators will always support candles. So I want to see a sell there. So let's see the market selling. All right. We want to sell until we get to that point, or at least close to that point. All right. And then form a setup there. If we don't, it's fine. We let the market go. Now look at that. So that means on the second day, you are not going to be able to take an entry. So what do? You let the market go. Or if you're still holding the first entry, that's it. Because instead of the market coming down to that point, they actually didn't. They missed it by just a few pips. And that happens, guys. Look at that. So that's how much you left it, okay? And you would have missed it. But if you were using indicators, now that is where indicators, they come in handy. If you were using indicators, you can see that the market is actually sitting at the 50 EMA. All right. So if we go to the 15 minutes time frame, using indicators, you are not going to miss it. You're actually going to catch it. That is where the difference is with indicators and price action. With indicators, you've got your nice W there. All right. Your nice W there. And a close on 13 EMA. All right. You've got a third tap and then a close on 13 EMA again, and the market goes up. All right. So you are going to take it on the close above 13 EMA here or here on those previous days. So that is exactly what you were going to do, because the 200 EMA is moving there where the market is actually sitting on, where price is sitting. That's what was going to happen. So that's the advantage of then using indicators, because they move, but once price is printed, it does not move. So that's the disadvantage of using price. So that's why you need both to know where the setup was going to be. All right. Now, this being the case, then it means we have seen our second level. All right. And we want to see our third level. So we want to see the third level whenever it's going to come, which is next week. So what do we expect next week? I do not want to see this going to the 200 EMA. I just want to see this consolidating here, while it's at the same time pulling the 50 EMA closer and the 200 closer. And I just want to see it going to the 50 EMA, wherever it's going to be, and then just go up and give us a peak formation, or maybe stay there for a while it's waiting for other pairs. So that could be Monday, that could be Tuesday, or Monday, it might even consolidate and not do anything, and do it on Tuesday. All right. Let me try and show you how this might unfold, because this happens sometimes, okay? So all right. So on Monday, you might have the market consolidating like this until it ends the day, right? And then on Tuesday, what do you do then? Because the market was consolidating, you expect it to come back to the low of the previous day and give you a setup from there, and then start to go up. All right, that is what you want to see from the 15 minutes time frame. Consolidation on the first day, and then a retest of the low and up. And sometimes the market can do whatever it wants, guys. It can do whatever it wants. Sometimes the market can decide to come back to the low, all right, and consolidate there and redo the whole thing again so that it catches up with other pairs, all right? So all you have to do is to have patience and wait. The market can do that. It can come back all the way down, consolidate there. By selling, other pairs are moving towards the 200 EMA, and then it sits there while other pairs are finished forming their low of the weeks and they want to go level 2, then it goes level 2 with them, all right? And then it goes level 3. So that can also happen. It's a possibility. So anything is possible next week. All right. Now, so I've explained to you Euro AUD, NZD USD, AUD USD. Now you should be knowing what their counterparts are going to be doing, because my main aim is to try and show you where you are supposed to expect the market to, where you are going to take your entries. That's my main aim. All right. So let's take a look at this one. This one I'm gonna be very quick because we did trade it. So here is GBP USD, and GBP USD, our entry is somewhere here. All right. Sorry, not our entry, but our point of interest, where we want to see the second leg coming to, is over there. You can see your 3 levels there, 1, 2, 3. All right. Towards the bottom. And this is our point of interest. So now we want to see whether the market will come to this point of interest. All right. Now, start of the week, and then boom, the market starts with a gap. And now, if you look at this gap, it's a little bit far away. It's actually at the start of the previous level. All right. So it's far away from the point of interest. So which makes things good for us and easier for us to take the trade. So what we did was I took a sell before I even saw all this. So I took a sell like right on the second leg. I think somewhere here. I took a sell somewhere here, yeah. Because I took it off 5 minutes because I knew it was gonna sell anyway. So that's why I took it over here. And I remember telling you guys that GU was gonna sell because it started reversing, and I said take your entries around here. All right, that's where I said your entries were gonna be. Now let's put the short position. All right, so this is where I said your entry is gonna be, and this is where I said your stop loss was gonna be 126. I think it was 126, 450 or 150. I can't remember if it was 150 or 450. It wasn't this close. Well, let me just put it on 150 for now, because I know that stop loss got missed by a few pips. So I can't remember if it's 150 or 450. We'll see how the market will do. And then our take profit was actually here. So you can see already that your risk reward for this trade is actually 3 times. All right. So that's 1, that's 2, and that's 3. So it's 3 times. So you're risking $5 to gain $15. Those are my kinds of trade. That is exactly what I want to trade. I want to risk less and gain more. All right. Now, the market then comes nicely. And I know some people saw this and thought, it's going to turn around on the IG50. Let me take a sell. I know some people did that, even if I didn't ask them to do it. I know they did because there were few left out. I remember when I was talking to someone during the weekend, they said to me, I've got GU here and I feel like it has left me. And I said, hold on, it's coming back. And guess what? It did come back. And to a good entry, I gave them a price where it was going to enter and it missed it by like 1 pip or so, but it came back to a good entry. So if they had taken the buy early, they were going to be wiped out or have heavy drawdown. All right. So it's very important. Take an entry where you feel your entry is good. Now look at this. Just by looking at this, at the back of your mind, you are thinking, I think the market has left me. All right. And I know we all think the same way, and that's what the market wants us to think. But I want you to observe how they will not take out this low and close below it. All right. Because the moment they do that, they're supposed to continue going down. So I don't want to see them doing that. All right. Look at that. They did not break that low. Because if they do, then they have to continue going down. That's a rule. Okay. Now look at that. Entry triggered, but we are in a loss. Okay. Yeah, so it was 150. Yeah, it was 150. So look at how our stop loss was missed. So you almost lost $5, but because you were patient, you kept holding, or maybe you did curse me a little bit and swear that if only I lose my money, I'm going to beat him. I don't know, but I think some people did. And look at that, back in profit. And this time around, we are moving. And I know we're going to come back to my entry there. We did again. All right. And you're thinking, now, by seeing this, you're thinking to yourself, this is an ID50 for that W. This is now a buy. It's no longer a sell. I know you will be thinking those things. But we do not have a second leg on the peak formation. So how can that be a buy? It can't be. All right. So be patient. Look at what happens next. So some people took a buy there. I know they took a buy there and boom. Now they respect that law. They break it or they respect it again. Now they've broken the law. So they have to continue going down now. After you break the law, you have to continue going down. Right. Now, look at what happens. This is the same day. They should close very soon. They have to break that law. They should close soon. Now, let's wait for the following day. All right. Now, this is becoming interesting. Okay. This is getting interesting now. Okay. And there. Take profit hit. Remember why I said use border of the candle? Let me show you. If you use wicks, all right? If you use wicks, your take profit was not going to be hit. It was going to be missed because that is how far the market went and they were going to miss all this. That is why I
Sorry,
say,
Coach.
yes.
Yeah, sorry for breaking you.
No worries, no worries.
Maybe because I come late and I
Mhm.
didn't see You know, we have a lot of multiple weeks there. How are we
Mhm.
going to identify the one to go for among the weeks?
That is why I say do not use the wicks. All right? Because if you
Yeah,
use,
okay.
yeah,
The part of the body, which one are we going to use for?
all right. So I will show you something that happens with the market, right? I will say the highest
Okay.
part. I'll say the lowest part. But guess what? The market is very clever. When it's about to turn around, all your candles are going to be equal. Look at that. All your candles are going to be equal.
Okay.
Go anywhere where the market turns, the body of the candle is equal everywhere. Everywhere, the body of the candles are equal. There is never a point where the market turns and the body of the candle, they are not equal. Everywhere, wherever, any point you want to think of, even this one, you want to come to this one, right? Look at that. Equal, 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 equal. They will always be equal because the market does not turn around with one candle. It turns around with two or more, all right? So wherever you want to go, your candles are going to be equal everywhere. Yes. So that's one thing that
That's
you need to,
one of the
to
signs.
take note of. Yes.
Thank
All
you.
right.
Thank you.
Yes. So now that we want to buy, okay? Because remember, we said we want to buy. If you had a buy limit, then your buy limit has been triggered and not in a loss. So that's a good thing for you, okay? You want to buy and you want to enter now. We said we're using candles. So now looking at this structure, to me, this is a W formation. This whole thing, it's a W formation. But it hasn't been broken. What do I mean? I mean, they haven't broken the high of that W. Let's see it clearly on the 15 minutes time frame. Right? That's your first leg. This one. That's your second leg. Okay? With the railroad track. So that's your neckline right there. So if I put my box here, all right, this is where I want to see the market come around, if it happens to come around, okay? But don't expect the market to come all the time. Sometimes it will not, all right? And then at the same time, I want an order block. I do not like putting order blocks on 5 minutes time frame because to me, they are more like misleading. Right, so I will use this green candle as my order block, or how far I would want my market to go, this one, because it has a longer wick. But that doesn't matter, though some people think it matters. So now all this doesn't matter. Why am I saying that? Because your entry is where the whole thing starts. That's where your entry is. So this whole box, you can even remove it. It doesn't matter, all right? I will come here and do that and say, this is it. All right. So the first line, the bottom line that you see, this one, was where I wanted to see the setup appear, and it has appeared there. So that line has served its purpose, and wonderful. Now we want to see those two lines, whether they will go up, because I want them to close above that V, that neckline. So I want them to close above and then come back and go up, or come back here and go up, whichever they want to do. Or alternatively, I want them to go to the 50 EMA and then come back and show me another W in these 2 points. Then I'll take an entry from there. Why am I saying another W? I'll show you. I'm saying another W because on here, I've got a W, which is not clear. It's nice, but it is not clear, all right? The market will not always be clear. And then I've got a nice M on the 50 EMA, which is clear. So I want to see a W here, all right? So I want to see a W, M, and W. before we move away. That's what I want to see. But if that doesn't happen, fair enough. Okay, so I want to work with what I have first. So what I have is what's happening now. So let's see whether the market will break up and then come for those. If it doesn't, fair enough, we let it go. Right. Now the market has closed above. Okay, so now I can wait for it to come back. Okay. Now the market left me, which is fair and fine. Now that the market did not come back to my points of interest, it means these points of interest, these two, let me just drag this one back this way. These 2 points of interest are no longer entries for me. They are now areas where I want to see the second leg of the W, all right? For me, but you can still use them as entries. It doesn't matter, okay? But for me, I'm going to use them as second leg entries or areas rather. Now, strange because they are leaving me. And let's look at the 1 hour time frame. Now you see what happened on the 1 hour? They've already left you. All right. So they did not come back to those areas. So if you wanted to enter on the 15 minutes, they did not come there. If you wanted to enter on the 1 hour, they did not come. So they are gone. All right. I do not see them coming here because they've broken above the 50 EMA. Now that they are gone, let's see where else can I actually find my entry. The first thing that I can see is this W. So it's a W with a shorter leg. That's what I can see at the moment, right? That's what I can see. So I can use that to predict where they will come. So that means I shift my focus to the neckline of that same W. The same thing I did on 15 minutes is the same thing I'll do on 1 hour. All right. This is my order block. All right. Then my entries. Now I'm looking for entries. I'm no longer looking for where setups will appear. All right. This is where it's going to be. And that one, it's going to be here. If they don't come to this area, then it means GBP USD is not my trade. Now that's where most of you need help on. Being able to be content when price does not come to you. All right. Being content when price does not come to you and just let it go. All right. Don't have that FOMO because it kills you. It kills you, I'm telling you, because you'll start entering a buy where it is now, and then it starts to reverse on you. I'll show you what happened on, was it Thursday or Friday when I was talking to someone? I'll show you that. Now, look at this. All right. So we want to look for an entry there. Let's see if they will come down. Oh, come on, GBP USD. Right. Entry triggered. Only one was triggered. I'm pretty sure they missed this one. Maybe from other brokers, the second one might have been hit or missed. I don't know. It happens. All right. Because, oh, there we go. It has been hit. All right. Now, what's happening there? All right. Now, look at this. Look at this. Look at this. Look at this. This is interesting now. See how they are now coming back for you on that neckline. The first neckline that we marked, all right? This is real time, guys. Not real time as in it's happening now, but real time in the sense that you are in the market and you are seeing this happening. Okay? So they just touched a little bit of that. They just touched a little bit of it. Yeah, just a little bit. Okay. All right. Let's see what will happen. All right. All right. they camped there, went down. Now, I know most of you will be thinking that's a sell, and people will be cursing me now. All right. Let's see what happens. Now, I see something like this. All right. So, do you see that we wanted to see a sell happening? Oh, sorry, we wanted to see a setup happening in that area we were talking about. However, the setup did not happen there and there when we were expecting it. It happened later on. The setup happened later. That actually happens. Now, because you're already in the trade up there, it's fair. It's fair and fine. It's okay because you're not too far away. Let me see. In terms of risk, maybe the first entry might be in heavy drawdown. Long position. Let's put for the first entry and see. Because my stop loss was going to be below the whole structure. All right, let me just put it here. So it simple means your stop loss was going to be very big for the first entry. So, which is for some people's accounts, that wasn't going to be good. For this one, same applies, but fair enough. But remember, price hasn't reached that point. So you're still good enough because the furthest price has gone is this much. And my stop losses are not usually this much. I usually put below structure. So which is why I'm saying, depending with your account, probably by then, someone stop loss would have been hit, which is fair enough. Even if it gets hit, you then wait for this opportunity here because this is still the same day. All right. It's still the same day. Now, let's see what happens here. Okay. So having this now, this becomes your W. Okay. Now, this being your W, you want to get your entry there. So let's say your stop loss has been hit and you want a re-entry. All right. By the way, we said let's use the one with the long wick. So your entry is somewhere here. And if you are using the neckline of the W, that on its own is the neckline. So that's going to be very hard. All right, let's just put it there. Okay. So those are different kinds of entries you will take. So now let's see whether any of them are going to be triggered. So probably the neckline is the one that gets triggered. Remember, I said the neckline, it always gets triggered all the time. All right. So the neckline got triggered. And now the other positions are back in profit. So that's why I always say sometimes these order blocks, they might not work. Okay. But the neckline area is the most probably area where setups are going to, where positions are going to be triggered. And now the market is leaving. Let's hope it will come back. Let's just see. This is the next day now. Hopefully it will come back, because if it doesn't, then it means those who are in the neckline, they got their trade. Those who are not, they did not get anything. All right. So now everybody's in profit. Now look at that. The next day, now definitely there is no turning back. All right. There is no coming back to this. Okay. Now you already know the market is not going to come for this unless if it's news that will come and spike or something, but the market is not going to come for this. It's gone. All right. So let's look how it looks like on the H1. So on the H1, this is how it looks like. All right. So either way, even with this entry, you are in good profit and you caught the second leg, but at a higher point, and this one is the one that caught the second leg at the good spot. All right. So now see how good it is to wait for that setup on the second leg. So you're using the first leg to determine where the second setup is going to be on the second leg. Let me repeat this point. You have your first leg on 15 minutes, right? So you're using your first leg to determine where your second leg setup is going to appear. If you have a third leg like this one, you're using your third leg to determine where your setup is going to appear. Do you see that? So you are using your first leg to determine where the setup will appear, and you're using your second leg to determine where the setup will appear. So that is exactly what was happening here. We started by the body of the candles, and then next thing, we started using the necklines, all right, going forward. So you can see it. We have been using it on all the pairs to determine that, oh, this is where I want to see the setup come, you know, that's what you're looking at. And that is exactly what has been playing around, all right? Now, moving forward, this was a good one because it was moving aggressively. And everyone is in very good profit now. And we're going to end the day very soon and start a new day. Now, starting a new day, where is our setup going to be? Again, higher highs, all right? So our setup should roughly be, you can mark the highest week in any of these almost equal highs, all right? And say, I expect my setup to be there, ideally, all right? And then number two, obviously you're going to use your indicators and say at the 50 EMA or the 200 EMA, whichever, because this is the safety trade, all right? Because the 1850 crossed over the previous day. So let's see whether they will get to those highs or at least to the 50 EMA, because the 50 EMA is drawing closer and closer there. Okay. Now, I think I might start showing you what I was talking about. So the person that I spoke to, I can't remember their name. I think they saw this and they said, I think, is it this day? I think it's this day. Let's see. They said they think the market is gone now. I can't remember if it's this day or the following one. Let's just see. Yeah, yes. It's this day. It's this day. I'll try and explain this so everyone will understand. So what was happening is the market had formed this W, right? And I gave them an entry and I said, probably here on the neckline, all right? That's where your entry, I actually gave them a price. I said, at this price, that's where you would expect your entry to be. And price was here when I gave them. And they were thinking, man, I feel like it has left me. I said, no, it hasn't left you. It will come back. Wait until it comes back. And what happened? Price came back all the way down. And unfortunately, it missed it by like 1 pip. But it doesn't matter. Even as when you get close to there, you can take an entry if you want. It's up to you. It's your account. For me, I wouldn't take it, but you can take the entry if you want. It's your account. All right. Now, if you look at then the risk involved, if he had taken an entry there, all right, where was he going to put his stop loss? His stop loss was going to be below the structure. All right. Now, look how big the stop loss is, even if you are intraday trader and you are targeting there. Surely that's a very big stop loss. I'm trying to show you the risk reward ratio of entering in the right spots. Now let's try and put the entry that I gave him. Okay. Just put the entry that I gave him and see how far that was going to be. All right. The entry I gave him was this one. So it means his stop loss was going to be, oh, why can't I see anymore? His stop loss was going to be somewhere here, and his take profit, if you're an intraday trader, was going to be there. Now look how much the ratio is. That's like 2.5. Yeah, that's like 1:2.5. So you are risking $5 to gain $12 or 12.5, whichever it is, right? So you're risking that much to gain that much. Now, that's why it is important to calculate your risk. Your entry will definitely tell you how much risk is involved in the trade, so that if you lose, you know that I lost $5, but I was targeting 15, you know, rather than saying I lost 5 and I was targeting 5. Like, what kind of a trade is that? Or I lost 5 and I was targeting 2. I mean, you can't risk $5 for $2. You can't, but you can risk 5 for 15. You can risk 5 for 10. My risks, they are always, it's either I am 1:2 or above, or anything above that. I do not want 1:1. I don't trade 1:1 trades. That is why I can easily take a trade like this one. All right. I can easily take a trade like this one here. Or let's put it on the bed entries that we identified earlier. Or let's put it on the top one. Yeah, on the top one. And just say below the low there. All right, let's say you got a bed entry, but look at where your target is. That is how I trade. All right. Or because I'm targeting the third level, this is where I am. There. So you imagine I'm willing to lose $100. All right. I'm willing to lose $100, but I know when this goes right, I'm gonna gain 100, a 200, a 300, a 400, a 500, or a 550, 600, something like that. That's how much. Or even if I reduce my target and say, okay, let me just target this, still that's like 350. If I say that day, it's still more, you know, everywhere it's still more, because I make sure I get my entry right. That will then tell me how much risk is involved. That is why you have to be very patient in waiting for the setup to form, patient in waiting for the price to come to you, the entry where you want to take the trade. And number 3, trade less and trade the best winning possible trades. That's why you see in a week, I only give you 3 setups, 4 setups, 2 setups, just 1 setup. Or maybe I just come and say I'm trading old USD and that's it. And I don't give you anything else. Don't you think that I see some of the setups? I do. I see some of the setups on other pairs, but I'll just see them, analyze them, predict where they will go, and I don't trade them. That's it. That's what I do. I will wait for that setup, which I'm sure this one, if I'm going to risk my $50 or my $10, I know that I'm going to walk away with a $10 loss, but knowing I knew this was going to go this way. Or if it then goes my way, I'll celebrate and say, yeah, this one I was really sure. So those are the kind of trades that I look at. All right. I'm not everywhere, to be honest with you. I don't just trade everything to say for the sake of trading. I just go, yeah, I see a buy on old USD. I see a sell on GBP USD. I see USD ZAR. Like every single day, you gotta have a trade to trade. If you're an intraday trader, it's fine, but at least in a space of 5 days, make sure that you trade only 3 days. All right, in a space of 5 days, trade at least 3 days. You can't have a setup every single day. It's not possible, guys. It is not possible. All right? You can't see setups every single day. At the end of the day, you'll be lying to yourself. Because when you start winning and you win 1, 2, or 3 trades, you start thinking that whatever you're going to analyze is going to go your way. And the moment you do that, the next thing you start losing. And you then start losing. And you start losing until you get 6 losing trades against 3 winning trades. And what happens? Your account is in drawdown. That's where the mistake is. So you have to fix that. All right. So this is how GBP USD turned out. All right. So this is how it was turning out on the last day. And now on the last day, very important day, where would you expect your setup to happen? My setup, I would expect to see it on the previous high. All right. So the previous high being this one. Okay. So I would expect it to see form a setup from there. So that being my first level, my second level, I want to see it form right there. Okay. So this being my second level, it was being reversed here. So let's see what the market will do when it gets there. That's where I want to see the setup form. All right. Market comes down there to my setup, and the 50 EMA is there to support me. All right. Now, shift to the 15 EMA. Sorry, the 15 time frame.
15 time
Now,
frame.
yes, 15 minutes time frame. So that is my setup. I can see a W there, all right? But I want us to take out these highs, all right? I want us to take out the highs, then I can look for buys. So if we just continue going up, then fair enough, I cancel it. All I want is to see us come back to the neckline. I really love these neckline trades because they have high probability of happening. I do not want to just jump on a trade. Now that I've said I want to see a setup happen here, which is good. That's what I want to see. But I want to see them cross over those highs. All right. So you see, you could have taken a buy from there before they go over and then they start consolidating. See all that? Now, that is what I want because they have closed above, right? So they've closed above. So now that means my entry is here, all right? My entry is there on that neckline. Now, notice how you've got like a V with an M in the middle here, that one there, all right? Sometimes if you want, you can even put another area of entry there if you want, but that doesn't matter still. Now here, I don't even know which order block to use. It looks so clumsy, so I'll leave it as is and say I expect the market there. Now that red candle has already triggered your entry, all right? The red candle has already triggered your entry. So let's see what happens next. All right, your entry gets triggered for the second time. It gets triggered again for the third time, and now you are in a loss. All right, so you're in a drawdown. Let's put the short position and maybe put it here, and then have it over there. Oh, no, sorry. This is, I want long position because we're going long. All right, so that's, I'm just gonna put it on the end of that, but obviously my stop loss will be below that, okay? And I'm targeting above. So already you can see, even if I'm targeting that high, it's already more than the stop loss, all right? Though I'm targeting above that, but you can see it's already more than that with that entry that you see there. So which is pretty good, okay? Now let's see what happens. All right. This is what happens next. Now you see a cow there. Cow 4 candle setup. Now I'm in profit. So I was in drawdown for a short time. Now I'm in profit. Look at that. So that's how easy it is for you to just, you know, get a win in the market just by getting the right entry. All right? Just by getting the right entry. Okay? I'm pretty sure that's the end of the week. But look how easy it is. Even if you were targeting the body of the candles there, your TP was going to be hit, but your target is slightly higher than your stop loss. All right. And immediately when they hit, when they break this, okay, you then move your stop loss on break even. Now you're playing with 0 stop loss. That's what you're doing now. But you know, next week as well, it's going to be more than that. So that's how you take your entries, guys. This is actually during the cycling, and my target will be somewhere there because I haven't seen the third level. So that's what I'm expecting to see in the market. And this is only just for the second level because they reversed it and then they started going up. So that's my second level. So I expect to see the market next week consolidate here and then go for the third level, or again do what I said it will do on NZUSD, which is coming back down here, restarting the whole thing and then go up. Or rather, what I said it will do, that it will consolidate on Monday, Tuesday, retest the low of Monday and then go up. But your overall direction is the upside. That's what you want to see, the upside movement. All right. So now, guys, I don't want to keep this video too long, and it's time for me to go and have breakfast. Thank you for listening to me. It's 8:49 now. I'm sure this is more than 2 hours already.
Oh, I think they said that creative FS don't hit.
No. I think this is more than 2 hours now.
Well, thank you so much.
Yeah, so
Have a
guys,
good day.
yeah.
Thank you.